This is Matthew Kratter from Trade University, and today I want to talk about Ethereum getting wrecked again and again and again. Today we're going to be talking about Lido and Rocket Pool. So the background for this is that staking ETH is very difficult and expensive. To start with, if you're going to do self-staking, you need 32 ETH, which at today's prices is approximately $48,000. So this is a fairly large amount to have to come up with. By contrast, you can buy a Bitcoin mining machine for a few $1,000s, and you can run a Bitcoin full node for free, but ETH has moved to proof of stake after the merge, and so you need this amount of capital to start staking ETH. Staking ETH is also technically challenging. So for example, are you actually going to leave your laptop open and running with $48,000 sitting on it in a hot wallet? This is what you have to do if you're going to stake ETH at home. So what people do is they like to give their ETH to someone else to stake for them. This is called staking as a service, and it's been a very good business for large exchanges like Coinbase and Kraken. Now we can see from the beginning, especially from a Bitcoiner perspective, this is already a bad idea. Not your keys, not your coins. When you give your ETH to someone else, you're giving up your control of it and allowing them to stake it for you. Now what's happened in the last couple of days is that the SEC in the US is going after these large stakers, in particular Kraken. So Kraken had to settle with them and shut down its staking as a service program and pay a $30 million fine. This is what we talked about in yesterday's video, and we talked about how Brian Armstrong, the CEO and founder of Coinbase, is worried that they're coming after Coinbase and other exchanges as well. So I wanted to respond to a couple comments I got. If you want to follow this controversy further, I'll link in the description notes to this video about the SEC shutting down Kraken, SEC putting stake in crypto's heart. But I got a couple kind of smart aleck responses. One from Pete Kate arguing that this will actually help the adoption of crypto, by which he means ETH, because people will use decentralized staking protocols like Lido, Rocket Pool, etc. And he tells me more homework needed. Hater. So that's what this video is. I'm actually going to do my homework. So if we take a look, there are other articles about this, how these liquid staking programs like Lido and Rocket Pool should take off. They haven't seen a rush of capital yet, but if we take a look at them, Lido in particular seems to be the largest liquid staking pool, almost $8 billion in value, and we can see that it would be worth even more if the price of ETH hadn't declined, but this is something that's been moving up over time. Lido's a very popular staking service. And if we take a look at the validators on ETH, it's also one of the largest ones, currently controlling about 25%. Kraken, by contrast, was only at about 7%, and it's being shut down in the US by the US government. We have Coinbase here, and Rocket Pool is here as well, but it's very, very small. But Lido is definitely a huge contender and a very profitable business. So how does Lido work as a staking pool? Basically, you can just go to this website, you can connect your MetaMask wallet or whatever wallet you use. If you're dumb enough to hold ETH, you connect it and you send them your ETH, and they send you staked ETH, ST ETH. I think that's what it's pronounced. And they'll give you that, and then you earn a yield on it. And this is basically how it works. So you send them your ETH, and then Lido takes that ETH and gives you, as I said, it gives you staked ETH, and it takes that ETH and actually gives it to node operators who will do the staking for you. So this, a lot of people have argued that this is pretty decentralized because we have all these different node operators working for Lido Finance, but it's not as decentralized as it sounds. When you take a close look, you begin to realize that Lido is not an open system. You need permission to join and become a node operator. And so there's this gating mechanism at work. If you're finding this video helpful so far, I just ask you to please hit that subscribe button. That's the single most important way you can support this channel. So if you want to become a Lido node operator, you need to apply. You can go to this portal and you can apply, and I don't know how long the wait is, but this is obviously a centralized service, and they get to decide. They do due diligence on you, and they decide whether they want you as a node operator or not. Now, who is this they? Who gets to decide? It's the owners of the Lido governance tokens, which, since Lido is a DAO, and these governance tokens are called LDO, is the abbreviation for them. So Lido's a DAO, it's a decentralized autonomous organization, and I would say it's decentralized in name only, but this is what it's called. Who owns the vast majority of these governance tokens, these LDO tokens? You guessed it, US regulated venture capitalists and other insiders. So like many DAOs, Lido is a DAO that is decentralized in name only. And if you take a look at it, at least according to this Twitter account, LDO is held by only approximately 16,000 addresses, with 95% of the supply in the top 1% of the holders. So this is a very concentrated governance protocol, and you can guess who owns the vast majority of it. It is US regulated venture capitalists. We have Dragonfly, we have, of course, Andreessen Horowitz, we have Coinbase Ventures, Alameda Research is a little bit out of the picture at this point, Jump Trading, DCG, Digital Currency Group. You can see all the names here. This is who got the tokens, and we can even read articles about this. Andreessen Horowitz made the investment in Lido, partially using ETH, buying up some of Lido's governance tokens. And so these are the large holders of the governance tokens for Lido. These venture capital, these VC holders of these tokens that are based in the US do need to abide by all US laws and regulations. If they don't do this, the US government's happy to send some thugs to Menlo Park or Palo Alto, where they're based, to gently remind them. And these regulations, of course, include OFAC censorship. OFAC is a division of the US Treasury that is actively censoring the moving around of money. If we take a look at Lido, basically they're the number 8th offender. In the last 30 days, they have mined a little over 63,000 blocks, and of that, 79% of the blocks were actively enforcing US government OFAC censorship. And this is what you would expect when you have venture capitalists behind this, because they can get in trouble if they don't do this. So when we see these pictures of Lido's growth, and what we're seeing really is power and control moving to Menlo Park and Palo Alto venture capitalists who will do the government's bidding because they're regulated and domiciled in the US. So that takes care of Lido. If the fact that money's moving, or staked ETH is going to move from Kraken to Lido, should not be a consolation if you're really interested in neutral money. Then we had another comment here saying this is actually bullish for ETH. People will move to decentralized options such as Rocket Pool, which we're going to talk about in a moment. PS, ETH, and BTC are both non-voting tokens, so I guess you're just spreading misinformation. This is true about BTC. What this person doesn't seem to understand is what proof of stake even is and how it works. It's not a voting token, but you need the ETH in order to validate the block. So this shows someone who doesn't even understand what proof of stake is. But he does bring up the idea of Rocket Pool, which is something similar to Lido. It's another liquid staking pool. So we're going to take a brief look at them, and they are also, it's a little bit depressing when you see this. So Rocket Pool, if we look at Crunchbase, Rocket Pool is funded by ConsenSys Ventures. ConsenSys, they only have one investor. ConsenSys may sound familiar to you because they are the company that owns MetaMask, which is the main wallet that's used by Ethereans and that's used in the DeFi space. So they own the wallet. They also own the majority of the node infrastructure because they own a company called Infura. And when you use your MetaMask wallet, it connects usually to Infura because no one runs their own nodes in Ethereum land because it's just not a value. And it's also very difficult to do, unlike running a Bitcoin node. So you have ConsenSys owning MetaMask. They own Infura. When Infura goes down, everything grinds to a halt, as I'll link to in this article in the description notes below. The other fun thing is when you use MetaMask with Infura, ConsenSys actually collects your IP addresses. So there's a huge privacy problem here because they're linking your IP address to Ethereum, your Ethereum address. If you want to avoid this, you can connect your MetaMask wallet to your own Ethereum node, but no one runs Ethereum nodes because they're too difficult and intensive to run. And so you end up leaking all this privacy to ConsenSys. ConsenSys was founded by a guy named Joe Lubin. And as a result, you have ConsenSys owning MetaMask and Infura and controlling it, and Joe Lubin being in control of that. Of course, Joe Lubin is one of the co-founders of Ethereum. And this is how incestuous this whole ecosystem is. So you can see now why it would be a disaster for Ethereum to have to register with the SEC. The self-dealing, the conflicts of interest between all of these companies like Infura and MetaMask, ConsenSys, Rocket Pool, etc., are probably off the charts. So I would just say to Ethereans, in conclusion, now that I've done my homework, enjoy your ultrasound money. Unfortunately, when you did the merge there's a very good chance that Ethereum turned itself into a security by moving from proof of work to proof of stake. And I'll link to this in the description notes below. So this is quite bad if we believe, as I do, that the SEC will continue to take actions against staking and proof of stake coins. Ethereum really is the ultimate rat's nest when it comes to this. If you found this video helpful, be sure to hit that subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.